Have you ever wondered how successful managers make confident business decisions? Whether it's approving a new project, launching a product, expanding into a new market, or even reducing operational costs, every important decision begins with one thing, which is accurate financial information. Now, you might think that accounting is only for accountants or finance professionals. But in reality, every manager, regardless of their department, needs to understand the financial health of a business. After all, you can't make smart business decisions if you don't know where the money is coming from, where it's being spent, and whether the organization is making a profit or a loss. This is exactly where accounting for managers comes into picture. Accounting for managers is not about becoming an accountant. Instead, it's about learning how to read, interpret, and use financial information to make informed business decisions. It transforms numbers into meaningful business insights that help managers plan effectively, control costs, evaluate performance, and drive organizational growth. Throughout this module, we will build a strong foundation by understanding the core accounting concepts, important financial statements, key accounting terminology, and practical role accounting plans in managerial decision making. By the end of this lesson, you will be able to look beyond the numbers and understand the story they tell about a business. That said, if these are the type of videos you'd like to watch, then hit that subscribe button with the bell icon to get notified whenever we host. And just so that you know, if you are interested in pursuing an MBA from a globally recognized university without putting your career on hold, then the online MBA by Amrita Vishwa Vidyapeeth offers 10 industry-focused specialization including AI, business analytics, ESG operations, and more. Learn through live weekend classes or record sessions at your convenience, all at the fraction of a cost of traditional MBA. This course comes with a wide range of benefits like placement assistance, opportunities for international exposure, and specializations developed with industry leaders, and a lot more. This program is designed for professionals who want to accelerate their careers, and if you want to know if this MBA is right fit for you, click the link in the description box below and in the pinned comments to explore the programs and its career benefits. With that, let's have a small quiz to test your business accounting acumen. Who primarily uses managerial accounting information? Government agencies, investors, internal managers, or is it customers? Let me know your answers in the comment section below. Imagine you have just become the manager of a fast-growing company. At the end of every month, your finance department sends you a report. It contains numbers everywhere: revenue, expenses, profit, assets, liabilities, cash flow, balance sheet, income statement. At the first glance, everything looks impressive. But here's the real question. Can you tell whether the company is actually doing well? Can you identify if profits are increasing because of better sales or simply because costs have been reduced? Can you decide whether it's the right time to invest in a new machinery or hire more employees? If the answer is no, then you're not alone. This is exactly where accounting for managers is one of the core subjects in every MBA program. It is designed to make you an accountant. It is designed to help you become a better decision maker. Because every business decision eventually comes down to one thing: numbers. Many people assume accounting is only for finance professionals. In reality, every manager works with financial information. A marketing manager needs to know whether an advertising campaign generated enough revenue to justify its costs. An operation manager must evaluate whether a new production process reduces the expenses. An HR manager prepares recruitment and training budgets. A project manager tracks project costs and ensures they stay within the budget. Even entrepreneurs constantly monitor profits, expenses, investment, and cash flow. In other words, managers may not be prepare financial statements, but they use financial information for every single day. Accounting provides the information that supports those decisions. People often describe accounting as a language of businesses for good reason. Think about traveling to another country. If you don't understand the local language, simple activities like asking for directions or even ordering food becomes difficult. The same applies in business. If you don't understand financial information, it becomes difficult to evaluate business performances, communicate with finance teams, or even make informed decisions. Accounting gives managers a common language to understand how money moves through an organization. It tells a story behind every business activity, not enough words but through numbers. From business activities to financial information, every business performs hundreds or even thousands of activities each day. Products are sold, raw materials are purchased, employees receive salaries, customers make payments, suppliers send invoices, loans are taken, assets are purchased. Individually, these activities may seem unrelated. Accounting brings all these transactions together, organizes them systematically, and converts them into meaningful financial information. Instead of looking at thousands of individual transactions, managers receive summarized reports that clearly show how the business is performing. This allows managers to focus on decision rather than the calculation. These are the three financial statements every manager should know. As an MBA student, you don't need to memorize complex accounting rules, but you should become comfortable reading three essential financial statements. The first is the income statement. Think of the company's performance report. It answers a simple question: did the business make a profit during a particular period? It compares revenue earned with expenses incurred and shows the resulting profit or loss. Managers use this statement to repeat. Managers use this statement to evaluate operational performances. The second one is balance sheet. If the income statement is a performance report, the balance sheet is a financial snapshot. It shows what the company owns, what it owes, and what remains for its owner at a specific point in time. In simple terms, it presents three key elements: assets, liabilities, and owner's equity. Managers use the balance sheet to understand the financial strength and stability of the organization. The third is cash flow statement. Many profitable businesses have failed because they ran out of cash. Profit and cash are not always the same. A company may report a strong profits while customers delay payments, leaving very little cash availability for daily operations. The cash flow statement tracks how cash enters and leaves the business. It helps managers ensure the organization has enough liquidity to pay salaries, suppliers, taxes, and operating expenses. This is why experienced managers often say profit keeps a business attractive, but cash keeps a business alive. Let's consider a simple example. A furniture company purchased wood to manufacture tables. At the time of purchase, the wood represents a resource that will help generate future revenue. This is considered a cost. Once the table is manufactured and sold, the value of the wood becomes a part of the expense associated with the generating that scale. Once the table is manufactured and sold, the value of the wood becomes a part of the expense associated with generating that sale. Understanding this distinction helps managers evaluate product profitability, pricing decisions, and operational efficiency. The same principle applies across manufacturing, retail, technology, and service industries. Every business has goals: increase sales, expand into new markets, launch new products, hire more employees, but goals alone are not enough. Managers need financial plans to achieve them. This is where budgeting comes in. A budget estimates future income, expenses, and resource requirements. It helps managers allocate resources, monitor performance, control costs, and evaluate whether business objectives are being achieved. Think of a budget as a financial roadmap that guides the organization throughout the year. Financial information supports better decisions. Every important managerial decision has a financial impact. Should the company launch a new product? Should prices be reduced to attract more customers? Should operations be automated? Should another branch be opened? Should the business invest in the new technology? Accounting provides the financial evidence needed to answer these questions. Instead of relying on assumptions or intuition, managers analyze financial reports to evaluate costs, expected returns, profitability, and risk before making decisions. This is what separates informed management from guesswork. One of the biggest misconceptions is that accounting belongs only to the finance department. In reality, it supports every business function. Marketing managers measure campaign profitability, operation managers monitor production costs, HR managers manage compensation budgets, supply chain manager evaluate procurement expenses, sales managers analyze revenue trends. Entrepreneurs track business performance to guide future growth. No matter your specialization, understanding financial information will make you more confident and capable manager. Accounting managers is not about becoming an accountant, it's about becoming financially aware. It teaches managers how to interpret numbers, evaluate business performance, allocate resources wisely, and make decisions based on financial evidence. As an MBA student, you will soon realize that every strategy, every project, and every business objective ultimately has a financial dimension. The managers who understand the number behind the business are often the ones who make better decisions, build stronger organizations, and create sustainable growth. Because in corporate world, numbers don't just measure performance, they tell the story of a business. And every successful manager should know how to read that story. And with that, we have reached the end of the session on accounting for managers. If you found this useful, drop a like and subscribe for more business administration breakdowns. And if you want a deeper dive into topics like business statistics, marketing management, organizational behavior, and a lot more, let me know in the comment section below. This is a Simply Learns video. Until next time, thanks for watching and stay tuned for more.